Hello again. Welcome to another episode of the Uranium Market Minute. Today is Wednesday, January 26th, and this is episode number 69. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. If you are not a member and you are interested in a sample of our service, click the link in the description below. You'll be able to download a free sample of a previous month's newsletter to get an idea of the type of content that we put out on a monthly basis. Before we get into today's video content, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right. Another exciting day in the world of uranium. Everybody today was kind of waiting with bated breath on the FOMC meeting. Fed Chair Jay Powell, his presser following the release of the minutes, in our opinion, was a bit more hawkish than the market would have liked. But with all of that said, the market ended the day. The broad markets just ended relatively flat. I do think it's going to take a minute. That could be a couple of days. That could be a couple of weeks for the market to really digest what the Fed's signaling is really going to mean for the markets. And so we'll have to see how this all shakes out. It's not necessarily the initial moves. Oftentimes the initial moves following an FOMC are not the moves that end up sticking for the short, mid, or even long term. And so we'll just have to see how it goes. Either way, the markets were flat. Uranium uranium shares had an up and down day. ETFs were down a bit. We'll get into that just a minute when we jump into the daily scoreboard, which why don't we just go ahead and do that now? So the spot price of uranium basically flat again, but we are continuing to see decent trading volume. Most of this is trader churn. If you're not familiar, the bulk of the volume in the spot market for uranium is pounds being traded back and forth, not purchases from end users like a utility or like SPUT. So when we see big volumes, the bulk of that is pounds being traded back and forth. But this is kind of a heavy volume of trading for a January. So that's kind of curious. I think that there's a lot of expectations going forward during this year in terms of perhaps a ticking up in term contract interest coming from utilities, especially for the long term. The short and midterm for utilities is relatively covered. So that's why we're not seeing a whole lot of action in the spot market coming from the utilities, maybe a little bit, but not a whole lot. But there is a pretty good amount of trader volume happening in the spot market. So I think that that's not only expectations of further interest for utilities in the long term going down the road, but also obviously financial demand, in particular with Sprott, with an expectation of an NYSE listing and the implications for that on the spot market. Either way, spot price relatively flat, 44.37 a pound mid-market today, basically unchanged for the past few days, and down a couple of dollars from the big spike up on the Kazakhstan news a couple of weeks back, up a couple of dollars from the end of the year, holding pretty stable, all things considered. Yesterday, the Sprott Physical Uranium Trust raised no new capital, did not purchase any new pounds. Year to date, they purchased 2.7 million pounds and raised 122 million in capital. That's over 1.1 billion total raised since the launch of their ATM in August of last year. They closed the day yesterday at a discount to NAV minus 2.42%. However, today intraday trading was relatively strong for the Sprott Physical Uranium Trust. It's possible that URA has been doing some buying. We believe that's what has been happening. In fact, I believe that today URA was starting to nibble away at SPUT and selling down some of their other holdings intraday here. So I do believe that Sprott was at a slight premium to NAV for at least maybe an hour or two during today's trading. We'll see if they ended up issuing any new shares, raising any new capital, or doing any purchases today. We will find that out and we'll let you know tomorrow. All told, Sprott now sits on 44 million total pounds of uranium. Their ATM, of course, is allowance for 3.5 billion in total issuance, and they have now done over 1.1 of that 3.5. Of course, they can continue to raise beyond that once they reach those levels, as they have done a couple of times now. Turning to the sector equity ETFs, despite the market turmoil and the relatively weak days in the sector over the past number of weeks, and especially the past week or so, both ETFs, again, no change in outstanding shares. I'm astonished that we're not seeing more redemptions here. I really am. And I really, I've been kind of pounding the table on this the past few days. I think this really is a sign that should be paid attention to. This is abnormal for this type of weakness, to see that type of selling in these vehicles and to not see share redemption. So money's flowing into the ETFs, strangely enough. So yeah, no change in outstanding shares for either ETF. As we've been saying, this is not the selling that you're seeing in the sector is not coming from pressure from the ETFs, with an exception of URA's rebalance. It's not coming from redemptions in shares. And especially considering the current sentiment, we're convinced that these inflows to the ETFs is not retail driven. Okay, we believe that the flows into the ETFs is coming from institutions and smart money. That's really what we're thinking here. The combined AUMs of these two ETFs, just below 1.8 billion, still a chunky 750 million off of their November high print in AUM, and that AUM loss because of the outstanding share, just off all-time highs in outstanding shares, that AUM loss is entirely due to the decline in the portfolio depreciation. So before we look at the charts, just a comment on this. We do expect there to be continued kind of cross currents in the sector due to the URA rebalance, and that URA rebalance is set to finalize before the 7th of February. So we have another week and a half, about almost 2 weeks of this rebalance, and hopefully they continue to spread it out like that rather than come in heavy on the last day or two, which they have been known to do in the past. So because of that consistent selling pressure, we're not expecting a really, really strong move to the upside anytime in the short term. However, of course, that could happen. We wouldn't be surprised. The sector can kind of, surprise us often to both the upside and the downside, but that's what we're expecting. Some more kind of cross current, some consolidation. Let's take a look at the charts. URA down just over 4% on the day with reasonable volume. I'm definitely seeing some outsized beta here to the downside move in the broad market, at least intraday, though the broad market did stabilize a bit. Definitely seeing some weakness here in terms of the moves of the ETF, which in our opinion has almost everything to do with the performance of their underlying holdings. And part of that has to do with their own selling. So we'll have to see if we see any new share issuance or any share redemptions for today as reported tomorrow or the next day. But I honestly, based on what we've seen the past couple of months, I doubt that there will be much in the way of redemptions, if at all. The Sprott Physical Uranium Trust, as I said, did trade up decently today, 2.58% positive, considering it was down at a 2.42% discount to NAV to start the day. And we did trade up all the way to 1446. That we do believe they were just above that 1% premium to NAV for a moment there. Whether or not they took advantage of that or not is yet to be seen. We are seeing the volume start to tick up in the physical trust. That is obviously something we like to see. Are we getting ready for another sizable move to the upside? That remains to be seen. Looking at Cameco, similar chart to URA, down 3.65% on the day. Volume, not huge, declining volume in the last few days. This likely also has something to do with the URA rebalance. Probably saw some selling of some shares today. And we've seen big options volume for Cameco, really big options volume. So it would be interesting to see if that's some longer term, more volatile positioning happening here. All right, going to the mailbag. We have a question come in. Justin, are we able to determine how much new issuance SPUT will be able to achieve with the URA allocation? In other words, how much new money will be raised to buy additional pounds of U3O8? All right, so this question requires sort of a multifaceted answer. First, we need to know what allocation percent still active is designated for URA. Now, we know that they're going to cap that at 10%, and we suspect it's going to be somewhere between 5 and 10%. So hypothetically for this exercise, let's just say 7.5% allocation into the Sprott Physical Uranium Trust for URA. Okay. URA came in today with an AUM of 1.13 billion. So 7.5% of that, we just under 85 million required purchases of SPUT by URA. Second, we know the SPUT cannot issue new shares when the share price of SPUT is less than 101% of NAV or 1% premium to NAV. So, just noting again that they were minus 2.42% discount to NAV here, that we would have to see significant enough buying pressure by URA of SPUT to first bring that up to that 1% premium to NAV, after which a percentage of the remaining capital coming in could actually go towards physical purchasing. So basically, we suspect that with a hypothetical order of 85 million, let's say 75 to 85% of that could go towards new issuance of shares and therefore to their balance sheet and their cash balance for purchasing of physical. So, but yeah, the uncertainty surrounding the percentage allocation is something that we need to know, and the amount that they will be offered below that 1% premium to NAV that is necessary for that ATM issuance. So basically, we suspect that maybe 75 to 80% of that 85 million, that hypothetical 85 million. So I think we'll be somewhere in between, very roughly 50 to 75 million going towards their balance sheet in terms of that addition by URA. So, you know, $1.5 million pounds purchasing roughly. Maybe if we get lucky, we'll get close to 2 million pounds coming from that purchase of SPUT by URA. But really, it's this initial addition is not really the big deal of this development. It's the flows over time. It's the passive flows into the ETFs during the next 2-3 years of this bull market, and how a portion of that will literally be going towards purchasing physical. That's the big deal of SPUT being added to URA, not just the initial purchasing that they'll be able to do with that issuance. So, and with all that said, you know, this URA rebalance, you know, when the market gives you liquidity, sometimes that's worth taking advantage of. So this extra selling liquidity that's coming from the ETF that we're only going to see twice a year, right? When there's new additions to the ETF during the rebalance, then that oftentimes that liquidity can be a gift if you are allocating money into a tranche, into a new position for your uranium exposure, that liquidity can be a gift. And it goes the other way as well. When we're going euphorically to the upside and the ETFs are buying heavily, that can be liquidity for you to sell into if you're trading around these things. So, you know, sometimes these down days and the selling pressure that comes from something like an ETF can actually be a blessing in disguise. All right, so be curious to see how the market shakes out the next couple of days as it digests Jay Powell's slightly hawkish verbiage and signaling to the market. We'll see how that shakes out, and see if we can get some momentum here into the spot market and get this market going. All right, hope everybody's doing well, and we will see you tomorrow. Cheers.